tonight I want to talk about tying it all together. As I just had a look, if you've not in the group, you saw the sneak peek of that post. The fundamentals, technicals, and the sentiment is just aligning. The stars are aligning, and it feels very special at the moment. It feels like we're on the cusp. Those of you that were here in 2017, to me, this kind of feels a little bit like after we got the Bitcoin hard fork out of the way, believe it or not. It's kind of what the election feels like. A lot of uncertainty in the markets. And at the moment, the markets seem pretty happy. So I'm going to run you through a lot of these in a second, a few of these cool charts that I've been putting together. I was meant to do an interview with Cointelegraph just then, but they had to cancel. One of the hosts had an issue, as you might have seen there at the start. So let's just have a look at the stock market. And this is maybe this trend line that stocks need to break. Who would have really thought in the election week, when we started the week off down here, and it looked like, we've crashed down below the old trend line here. Who would have thought that we'd rocket up this much? And it's still a little bit up in the air, I guess. But at the moment, this is the trend line, very, very clearly, the line in the sand that the stock markets need to get above. In terms of the US dollar, this is a godsend for crypto markets and all those other assets. So this is the trend line that we've been watching for ages. It broke above. So this was heading into the election week. We were above it. And one thing that I posted last week was this chart where we want to get our Bollinger Bands and put it on a line chart just to make it a bit easier to see. We'll get rid of this trend line. And what I showed on Twitter and in the group, I did a more detailed write-up about this, was the fact that whenever the US dollar gets to the top of these Bollinger Bands, it tends to roll over. And let's just bring that up, actually, because I circled all these occasions and explained it in a lot more detail just here. Yeah, beautiful. So here we can see, the green is when it touches the top, and there's a couple of exceptions where it touches the top of the Bollinger Band, but it doesn't roll over. And so what I was saying here is the exceptions, the only time that this didn't happen was when we had a nice strong bounce off the midpoint. So here we get another example. It touches the top of the Bollinger Band, but it doesn't reject down. So why is that? Well, it had a strong push off the midpoint of the Bollinger Bands. But other than that, every time it touches it, it rolls over quite sharply. So as you can see just a little bit behind me there, the other day, I kind of tweeted it and said, I think we're every chance to roll over if history is anything to go by. And that's exactly what's happened just in those few days. All the way at the time it was touching the top of the Bollinger Band, we're all the way back down to the bottom. So pretty significant move in election week. Why is that? Well, at the moment, the market is trying to tell us that, the whole Trump versus Biden, it looks like Biden is in now, and he is the one that's promising to spend at least $1 trillion more. So remember, Trump and the Republicans still want to spend, 1 or 2 trillion, but 3 trillion is more. And so the markets are always trying to price in what's going to happen. An extra $1 trillion means an extra trillion weaker or inflated US dollar compared to, the euro, which it makes up 50% of this basket. So I've got a few of these comparison charts here, which I've been using a lot more of lately, just as a visual guide while there's lots of moving pieces, mainly because it can give you an edge. So the other day, for example, there was I'm not sure if I spoke about this already or not, but there was a ripper trade where you can look at things like the euro, maybe that has a bit of a move, and a few minutes before, or even a split second before, if you're a day trader and you're looking for sort of Bitcoin or gold to break certain levels, and you know that gold is going to act inversely to the US dollar, and then the euro is going to sort of affect that DXY basket. So when we look at all those things, and when we look at the stock market, I've got, I might even just show you this other screen that I've got up at the moment. So this is a split screen I had the other night, for example, showing you that their FTX had the prediction markets of Trump and Biden. So that was all very volatile, as you can see here, up and down. It's kind of settled down now with Trump at 0.3% and Biden at 3% versus 96%. So almost in the bag. But when we were looking at all this stuff happening, you can say, look, the US dollar is getting weaker here. It's about to fall off a significant level. Let's bring up the euro, for example. Let's see if that is about to break out through a significant level, and see how this might break out a split second before. And that's your trigger to go, okay, the US dollar is about to break down here, break down through this key level. These are just 5-minute charts, but I'm just giving you an example of how you might be able to execute a trade. And then you go, okay, that's about to tank. Bitcoin is likely about to break out, and it has played out that way a lot this week, where some of these initial breakouts, we just got great cues. So we're always looking at these different relationships, and I will definitely do that show soon, showing you how I like to set up my trading view. A second monitor here, I'll have something like this, where I just want to be able to check on everything that's happening out of the corner of my eye. I'll bring back up your messages, your chat, for example, again now. I've got actually 2 laptops, so there's a lot happening at the moment. But you get set up with those things that you want to monitor and keep an eye on. And the relationships and correlations have been very strong at the moment. Here's another one that I wanted to show you. So this is orange line is our Bitcoin dominance. So this is a weekly chart, goes back to 2017. Bitcoin back then, axis on the left-hand side, was around 100. Bitcoin was kind of the only coin with a large market cap. Alts came into the picture a little bit more in 2016. It gets down to 95%. Ethereum picks up a bit of speed, XRP, Litecoin. And then start of 2017, mid-2017, a lot of you starting to get in the crypto and hear about these alts. Still up here around 90%. And then the big first public wave, and the Bitcoin dominance falls and bottoms out at 36% roughly here. But what a lot of people are kind of shocked by when I show them this chart is this is a chart of the DXY, the US dollar index. And so I like to compare this. It's the basket of currencies, and US dollar is the king of currencies, the world reserve status, versus the king of crypto. And this is unbelievably tightly correlated. When you would say to people, how tightly correlated are Bitcoin and the US dollar over the last 4 years, have they moved in lockstep? And people would not believe you that it was this highly correlated. And the blue that we've got down the bottom here tells you that exact correlation. So from these weeks from here to here, the correlation was consistently around 90. Then there's obviously times when things get volatile and it's not as perfectly correlated, or they can even move a little bit opposite to each other. But this indicator, if you want to bring it up, is what's it called here? Correlation coefficient, I think. Yeah, correlation coefficient. That's a free indicator on TradingView if you want to bring that up down the bottom. The next one here we've got is gold. Same story. I just want to look at these times when and if gold is related to the US dollar index. And yes, most of the time, as we'd expect, it's got a strong negative correlation sitting here around minus 90. And it's got back to that at the moment. So what I want to take away for you really on this chart is, see these lumps here when we get up towards 50, 60, 70. It's kind of been a bit of a trend here where it's actually got a little bit higher than it's ever been before. And there's times when gold and the US dollar can go up together. That's the takeaway that I really want you to understand there. There's times when Bitcoin and the US dollar can actually be inversely correlated or highly correlated. So I just think that one thing that people are not really expecting at the moment is this scenario where Bitcoin could very likely go up with gold at the same time, and the US dollar could even strengthen, because it's all relative to these other currencies, which let's just have a quick squeeze. I'll show this other chart in just a second. The one that I wanted to show you was we have a list of the world's currencies and how far Bitcoin has already made it in terms of that progress and the size of that list. It might have been in this one. That's a super cycle video. I'm sure I had that up for you guys. Let's tweet it out. My documentary. I'm just trying to think what video I know it was in for sure. Okay, yep. It was in my gold presentation. So this was at the conference. Perfect. This is what I'm after. So this is a chart that shows you that Bitcoin is already 6th on the list of world currencies in terms of the size of them and market cap. And it's going to continue to steal off these other currencies. And people were definitely shocked when I told them this. Do we have a nice full screen of that one? No, we don't. Okay, sorry I can't get that full screen, but as you can kind of make out here on the list that gold is up the top. Gold is already up here at 6th on the list. Bitcoin is down here, and it's made its way up this list from 180 to getting up towards 300 billion market cap. So it is coming to eat the lunch of all these other currencies. And the reason I want to show you this is because of these next couple of charts. So here we can see the gold overlaid with M2 money supply, so US money supply. And down the bottom, the relationship here is what percent do they relate to each other. So the few times here it gets to 100%, you can say that the market cap of gold is the same as the M2 money supply, the amount of US dollars in the circulation, or in the what they call the M2 money supply. And throughout history, there has been a couple of periods where the market cap and the value of gold has been more than those US dollars, or backed 1-to-1. And the data gets a little bit skewy back here, but this kind of shows you where back in the day we had that gold-backed currency. So this M2 and gold were far closer to a 1-to-1 relationship. That changed a little bit since they depegged and they were able to allow the proliferation of fiat currencies. But guess what? Gold caught up, and that's where we're waiting for that to happen at the moment. Now, this is a log chart, so I kind of show people the log chart so you can see the broad movements, but when you take it off the log scale, you can see how much catching up that we've got to do and how quickly it caught up from what's this percentage here down to the 30% to get back up to 100%. And so we're back here sitting at 60%. And that's kind of telling me that gold could double from here. Where are we? Back around 2,000 an ounce. So getting back towards 4,000 or 5,000. Keep in mind they're about to spend another $1 trillion or so. So I just think the potential upside to say that gold is probably going to get to $5,000 an ounce in the next few years just to get to fair value, that's no longer a wild conspiracy thing to say. Like, here is the data right in front of you. Now, I've done the same thing, but this is just stacked on top of each other or added together. So adding it together compared to 20 trillion of M2 here we can see it adds them together up to 30 trillion. So the amount of currency. And the reason I wanted to stack them together, take that off log chart, that's a lot clearer, what I'm trying to show you and illustrate. So what I want to show you here, and all these messages that we just spoke about, let's tie it together. All the central banks around the world, whether it's the US or Australia, have just announced they're going to do $100 billion of QE and probably more. And all these other, America have just committed to it. The Bank of England are just talking about doing another 100 billion and going negative. Every country is about to do this, and to get out of COVID, or if they find they're going down this path of Japan where they just can't get any growth, they've already committed to try and get more growth and more inflation, that 3 or 4% compared to the 2 or 3%. So it is an absolute done deal that they're about to print trillions of dollars. Everywhere on the planet is about to do that. And for the first time in history, as you go up this chart of, well, what are the most respected, the hardest currencies? Where can I get a nice yield on my savings? US 10-year yield. For years and years, pretty much risk-free. You're getting, these are incredible rates. People of our age just would absolutely kill to have a savings account, to be saving up for a house back in the early 2000s even, and being able to get 6 or 7%, maybe more on a high interest savings account. You'd be getting 10%. So that is a thing of the past. Now, in the world of crypto, yes, whether it's DeFi or something more centralized like Celsius, that is a big reason why a lot of money is going to continue to flow into the world of Ethereum, DeFi, crypto, lending. That's why the interest rates are higher, because there's a huge demand and there's a lot more circulation of the money supply. Even compared to, actually, let's bring it up and actually compare it on this chart. So that M2 money supply, the latest data we got out the other day, the velocity, how quickly dollars are turning over, that is now down towards 1. So every dollar in the ecosystem, let's make that nice and thick and green, the US greenback, every dollar in the US system is basically only being spent once a year, compared to, you pay in the small town, you might pay the butcher, then he goes and buys his fruit and veg, and then the fruit and veg goes and pays their rent. The same dollar ticking over, circulating. So what it's showing us is, I think the opposite effect of what central banks wanted to happen when they printed all this money was to get people spending. There's now a lot of data suggesting that people bunker down and they buy things that they kind of really need, and they like to stockpile, just like we saw in the pandemic. A lot of people went out and spent, and consumer spending has gone up. But people buy things like canned food, or trying to bunker down for a tough time. So this is a huge problem they face. Other end of the spectrum, you've got the DeFi reports that came out the other day that the velocity of money in the world of DeFi is closer to 20. So there's just so much happening, so much activity in that world. So for the first time in history, you can no longer get the good interest rates. We're probably going negative in the US. We're getting there in Australia as well. And so when I look at these charts and say, look at all this money, and it's now got a choice of where it can find a home, and gold now looks like a far better choice. But also, let's bring up the Bitcoin version of this one. So to start off with, this is the log chart, just to show you the basis of, Bitcoin only really got even a price. This is in the billions on this side axis here. So Bitcoin only kind of reached that billion market cap in 2013 to register on the scale. And back here, it's 0.01% of the total supply of all the money. So let's take it off the log chart, put it on just a normal scale chart, and you can see Bitcoin's down here, sitting at around $220 billion as of today. All right, so what percent is that? We're currently sitting at around 1%, and this is just of the US money supply. When you take into account all the money supply in the world, Bitcoin is far less, probably closer to 0.1%. But for the first time ever, the virus of negative interest rates continues to spread. It started off in Japan, goes to the bonds, and then it goes just further and further out. And it's going to come to Australia, just as it's going to come to all these countries. The Bank of England is saying prepare for it. New Zealand have hinted it's coming. The Fed and Australia have said they don't really want to do it, but they're going to be forced to do whatever the rest of the world does. Here's another example of something we spoke about in our video at the start of the year when we spoke about the halving and this update. One of the big drivers was going to be the negative interest rate debt that was sitting down at 11 trillion at the time, and I said it's going to pop back up to 17 trillion and probably surpass that. And sure enough, here we are. We're getting ready to pass this, depending on how recent this data is. So that is 17 trillion that's going to make the move. Enormous numbers when we think about that M2 money supply. So not just bonds, it's all the currency as well that's capable. Bonds aren't included in this M2 bracket. So pick your number. Is it 10 trillion of M2? Is it broad money? Is it all the derivatives and all the currency in the world? Do you want to take the 100 trillion number? But this little flow of money that's just sort of sitting here and a little bit irrelevant, this orange line, if I'm a betting man, is going to start to grow. Maybe not that steeply, but you see where I'm going with this? It just makes sense as an investor. And you hear about the funds at the moment, and through COVID, a lot of the good investment funds were sitting in 20 or 30, 40% cash. And the conversation is going to change. Think about what Michael Saylor did, and he speaks about MicroStrategy and the melting ice cube. And this is on Seeking Alpha and Bloomberg, biggest websites in the world. So cash is this melting ice cube. You've got to go somewhere else. And now we've got MicroStrategy, who have clearly made a ridiculously good investment decision. Hindsight's a wonderful thing. I think they made more money just doing that than they had in years of earnings, if not a decade of earnings. So as we get further into this bull market, it becomes a self-fulfilling strategy where there's less and less coins that are even available to sell. We've seen the amount of coins on exchanges going down. People are sending them to their hardware wallet to hodl. And one thing that I really think the beginners understand, and people that don't truly believe that Bitcoin's going to go to 100K, or they think that as soon as it does, they're going to sell and try and almost get rid of it and feel like they've ripped someone off. And there'll probably be a correction. It might go all the way back to 30,000. But once you truly understand Bitcoin, you understand that once you sell all that Bitcoin, maybe there's another big downturn in the economy the next year. And instead of printing 20%, they've got to print 40 or 50%. And at that point, the debt's 40 trillion, but they end up with 60 trillion by the end of that year. Do you see where I'm going with it? And no matter what they do, Bitcoin is just there. Now, Ethereum's hopefully hardening its monetary policy, so that's also going to be attractive to some degree. But look, Bitcoin at the moment has got the more of the track record, the network effects, the branding. So let's one step at a time. But your $100,000 Bitcoin can basically overnight, as soon as they say we're going to have to print huge amounts of money, it's probably going to be 50% inflation rate of M2 money supply this year. Look, we know you guys didn't really like the, increasing the supply by 20% in 1 year from 15 trillion to nearly 19 trillion. But tough luck, next year the supply of this money is going up again and again. So when all this starts to play out and people have more on-ramps, easier on-ramps, the data that we got out today saying along the lines that, Square and Jack Dorsey, it continues to be their biggest revenue earner and winner. So you can choose to go down this path all that you want, but all of a sudden these two lines are going to start to converge. So obviously at the moment we're down here, it just does not even register. I'll bring this up a little bit so you guys can see it because it's behind me. These numbers are really important to understand when we're about to do this final sort of analogy. Bitcoin currently at $220 billion market cap. It goes on a bull market and Bitcoin gets to, what is it at the moment, 16,000. So let's just go to $360,000, thereabouts, 360 billion market cap. Okay, so that barely inclined line is taking you to a $24,000 Bitcoin at a time when in the next 4 years, are they going to be spending another $10 trillion? I'd argue that they're probably going to spend whatever they spent this year or double each year. So, we're talking 10. I'd say we're probably going to be at 30 trillion by the end of next year, 2022. What are we now? 2021. Yeah, so I'd say we're probably going to be at 30 trillion by the end of next year. So you look at the steepness of that curve. That is the money that is coming in. And the question now just becomes what percent of people are going to wise up and say, this is a worse option. You can print all that money you'd like, but every dollar you print is going to go into Bitcoin because we don't want your crappy diluted money. Now, the other even more bullish case is, well, what happens if all those people work out that it's the same for the other money that hasn't been created yet or their savings? So you can make the case that all the old money starts to get captured and we only actually use cash as a payment method. We denominate things in dollars because it's stable and people are more familiar with that. But everyone who holds any money or wants to store any sort of value uses that Bitcoin or gold. So this is where you hear those astronomical numbers and it sounds crazy, but hey, if we just grew at the same rate just for next year, then that takes us to this $10 trillion market cap. So add a 0 times 5, that gives us probably nearly $1 million Bitcoin. So you start to, when you see it visually like this, the representation of where the money supply is going in terms of growth versus what Bitcoin has to start to capture. And I just want to make it clear as well. Sorry, I should have done this at the start. Here is the 0 point. Yep. Yep, one more. So you can barely even see it. So everything below this line, guys, is that's 0. So the chart really looks like this. It is literally this tiny little drop in the ocean, and Bitcoin just has this infinite upside of money, currency it can capture that is going to come into it. And the way that it comes into here is through the exchanges, through the Cash App, through local Bitcoins markets. You know, the number of on-ramps now is just bigger than ever before. So, look, I probably should have highlighted that, made it more clear at the start. But it's probably not a bad thing to finish with here, just to really surprise you and show you that at the moment, this is Bitcoin's market cap and how much of this currency that is being created just to the nth degree and is going to continue to be created. So, I mean, let's go here. I honestly think you guys would probably agree with me, wouldn't you? Over the next decade, we're probably going to go to 50 trillion US debt easily, probably more. And you can't even see that tiny little yellow speck. Now, that is with the currencies of the world. But the other thing that Michael Saylor started talking about recently was, well, that they're probably going to buy more Bitcoin. But when you look at the tech stocks of the world, what he's kind of saying is that it doesn't matter if you have a stock that pays a dividend or a growth stock. If the government are going to print this much money, a 7% growth stock still isn't really a winner in the grand scheme of things. You've got to realize that even those shares and everything that's priced in US dollars is still being diluted. So unless it's harder like Bitcoin is and scarce like Bitcoin is, you're still better off. So whether it's the fund managers with cash on their balance sheet, that now becomes, hey, that's irresponsible to hold 40% cash because they're about to dilute me 25%. You know, mathematically, you need to put me into gold or you need to put me into Bitcoin. That's where these conversations are going. So, look, I really hope that makes sense. Gold has gone from being a pet rock just a few years ago to Warren Buffett investing in it because of these macro conditions, the backdrop that I'm sort of describing there as well. That's been a pretty good rant, I think, half an hour. So I will have a look at your questions. But let's head back over to the charts and bring those up for you while we have a bit of a chat. And Ethereum, boy oh boy, what a powerhouse today. And forming another bull flag, probably about to break out higher. Bitcoin, blue skies. The next final resistance is this 16K, which we just tapped and pinged. Heading into a weekend, I think, look, stocks had a little bit of a pullback just before. What I'm starting to notice, I don't know if you guys noticed this, the audience from the US will have far more insight, but I have heard that we're kind of getting maybe the situation where the Republicans themselves are going to not stand behind Trump. If they think that the common sense thing is that, yeah, Biden won, then Trump can make a lot of sing and dance and tweet, and he's probably going to be in the news, but they're going to say, hey, let's get on with it. There's millions of Americans that need this stimulus package. The House and the Senate and the new president, we've got to start to get along and just get something through. And it's not about you anymore, Donald Trump. I think that's the way they're going to go. Now, some people are going to disagree with the results. Maybe it does get contested. They would be the bad scenarios for the market and for crypto and gold if there's less certainty about getting that extra $1 trillion or any trillions. That's when the US dollar would strengthen. So that is definitely how I'm viewing things at the moment. That the ideal, the Goldilocks scenario here is that we just kind of get on with things and get this spending going. And if that's the case, the technical levels, the sentiment, there's new people coming in, but it hasn't been over the top. The attitudes towards Ethereum and coins like Wi-Fi that I wholeheartedly still stand behind, guys. And there's people that think I'm paid to shill this who don't understand that Wi-Fi is a decentralized project. There's no team. There's no one to pay you. Okay, the protocol can't pay you. They don't have more Wi-Fi coins. So it's so funny when people say, "Oh, you're someone having a go at me today in another Facebook group. You're paid to shill this one." How can a protocol pay someone? So I like this coin because it's very simple. It pays out a yield, and all the yield paying projects in crypto have kept growing. I can't stress this enough. DeFi is not dead. Look, the coins had these enormous runs, the synthetics that we got 100x return out of, and people are acting like it's dead because it's had a deep pullback. These are perfectly normal pullbacks in the world of crypto. You saw it time and time again. This is 60-70%. The smart traders are taking profits here, and I drummed that into our members every day. I was saying take profits throughout August, September here. I know, well done to a few of you that sold the top and bought a house in Sydney. Those sort of messages I get are just awesome when we get stuff like that. And then what happens? Smart investors are dollar cost averaging back in and buying when there's blood in the streets, buying more when there's blood in the streets. I bought Wi-Fi yesterday. I got it wrong and I got stopped out of this trade a couple of times, but I am back in Wi-Fi now. I think my average price was 8,000. But anyway, that is looking like a pretty good entry now. And smart money knows that this project isn't dead. Okay, it's the trolls and the guys that are having a crack at you that don't understand crypto. And there's the silence on social media, because I'm telling you right now, the crypto DeFi hedge funds, this is one that they all want to own. And FTX shorted this into the ground, and I don't like that side of FTX. It's a free market. They can do what they want, but I do feel it's kind of, you're so big, you've got so much power, you've got a lot of capital that you can borrow to put on huge margin positions to really ride coins into the ground. So that is a reason why I generally think that this price has gone down more than it otherwise would have in an even market. Same reason why I think Bitcoin and Ethereum go down more than they would in a normal market, because derivatives and 100x leverage is kind of dictating the price movements. So yeah, it sucks to the downside, but don't complain about it, because it's what rockets things to the upside as well. And it's up to you to don't be a sook. Learn how to take profits when things are euphoric. Learn how to buy and dollar cost average in when there's blood in the streets and everyone tells you that it's DeFi's dead, Ethereum's dead. Okay, you've got to be the better person and leave that other stuff to the herd. Okay, they've got to make mistakes and learn, and hopefully some of you have gone full circle and you're really proud of yourselves for doing so. While we've got the charts here, just quickly, gold and silver, they're doing tremendously well. They're benefiting from this weak US dollar. A couple of ways to draw that, but I think that's probably the preferred way that we have broken out of these downtrends now. Oh, sorry. Let's get this one black. I did talk about these the other night, didn't I? So, look, some people can have it drawn like this. As you know, TA is more of an art than a science. We just want the general psychology of a flag about what that means. And if you haven't done all that TA yet, guys, that is the one. If you're only going to do one trading educational module, make it that one. So if we head over to resources, I just want to show you this trading chart patterns. Have we got chart patterns here? Triangles, wedges, flags, and pennants. This is the most important thing to learn about, particularly in bull markets. Okay, this thing, putting this together with leverage and a crypto bull market, and now you can trade altcoins on leverage against US dollar pairs. This wasn't around in 2017, and I honestly think I think it's a license to print money, and I don't want to make it sound like it's easy because it only lasts for a few weeks a year, and that, or not a year, a cycle. So probably every 4 years we get a period like I think we're possibly having this weekend, where if you know how to trade a triangle and you know how to use leverage, an altcoin might break out and go at 10% in a day, and the risk to reward is highly favorable because you're in a bull market and you know this chart pattern. And if you can execute that on leverage, you know, you can have a bit of a play around in your fund account and put on 10 or 20, 100 times leverage if it's that money you're kind of willing to risk. And a 10% move on 100 times leverage can be 1,000% gain. And that's when, you know, you can turn that $100 play money that you might have spent at the pub into $1,000. And in a true alt season, we'll be getting these bull flags and pennants and that every day. So if you stick to your rules and, you know, place your stops, you're going to have losers. And back in 2017, some of you will remember that I had got 44 winning trades in a row before having 3 nasty losers, and my ego got the better of me as well. And I got a few nasty phone calls in the middle of the night from people that lost a lot of money from blindly following my trades. But it was that period. It wasn't that I was a good trader. You know, there was a lot better traders than me. I've probably say I've grown and matured a bit as a trader since then, and hopefully I'm more experienced and can put those skills to work again in this bull market. But it was because in a bull market we have a lot of the easiest chart patterns to trade. All right, so that's enough of me talking about flags, flags and pennants. But no, you guys can tell me if you think I'm wrong, but the way that these charts are setting up, it just looks like Bitcoin's kind of had its fly. The big pennant that we were speaking about. Hey, I didn't actually mean to set this up like this, but Bitcoin in its pennant, where it had the big breakout, then it came back, tested it. Are we on a log chart there? No. But this is that pattern where we break out of a pennant, we come back and retest it, and we go off to the races. You know, that's just another example. But let's put this on full screen to make it easier to see. I just want to show you Ethereum because that is about to play catch up, I believe. Back to our candles, back to our shapes. This falling wedge was the pattern that we've been watching all year for the most clues about where the market is going to go. We've pulled back right back to this golden ratio that we all know and love. So that was another clue the other day that told me to start looking for Ethereum to bottom and outperform. Now, it's gone a little bit lower than we thought, but, you know, thereabouts. And a lot of people well, maximalists being toxic and laughing, Ethereum's dead, DeFi's dead. That's just those other clues we can start to say, well, hey, there's kind of getting towards blood in the streets now. But it's this US dollar pair. Beautiful uptrend. Whether or not you want to call this a pennant or whatnot, let's go on the weekly chart so you can see it clearer. It's the last real stop here, isn't it? These kind of levels. Sorry. For 480, a tiny bit of a wick there, a little bit of resistance through there, but it's more so where we are now, 440 up to 470. And once we get above there, I do agree that if things are bullish macroly, the Goldilocks scenario where Biden's in, all countries around the world do the spending, that's when I seriously think that ETH can have a crack at these numbers that seem ridiculous right now. Talking about $700, $800 ETH. By December 1st, we're probably going to have a fair idea whether or not we get the ETH in this contract. 33,000 ETH in the first few hours or days. There's no doubt in my mind that we're going to get enough there to stake. That's probably going to be chugging along nicely. We've also got Bitcoin that's broken its highs by this stage. I don't want to be an uber bull now because we've started to go pretty parabolic, but I also think that you've got to take the mindset that this can well be considered a log chart. We've got to think about this as big picture, long term. All those charts we just looked at in numbers in the trillions of dollars, we're a drop in the ocean. So when we look back at some of these that just felt like the biggest parabolas ever at the time, they're absolutely minuscule on these charts and insignificant. So that's where I do think that fundamentally we can make a new all-time high this year for Bitcoin. And we can very much blast through to newer highs. And 100,000 in the next 5 years remains my target for Bitcoin. But look, that's coming up to nearly 45 minutes. I'll stop ranting now. I think I've covered everything I wanted to cover charts-wise. Let's just have a quick scroll down. Let's have actually a look at CoinGecko. Oh, MoonSwap. I swapped my Moon tokens again the other night, and I had a lot of trouble with the X-Moon exchange. So those that don't know, you can get your Reddit points, the moons that you have, and it's kind of advanced. You've got to turn them from moons to X-Moons using the XDAI sidechain and a custom sidechain. Anyway, 2 or 3 steps, and then you can actually turn your moons into DAI, into a real currency. But the website was playing up the other night, so there was another website that I did have to use. Was it Moony? This one here, if you guys are looking for it. Yep. Alrighty. How are the comments going, guys? Does my wife forget my name? I'm not sure what that means. No thoughts on Wi-Fi DAI. Is that another one of the high interest savings accounts? Fox analysis in the short term. I spoke about that the other in the last night's video if you want to check that out. I also did a write-up for members on that the other day. 150% APY on HoneySwap. There's some great yields around as well at the moment. I am going to wrap it up, guys. It's nearly 9:30. Thanks for the $2 donation, SAS Crypto. Thank you very much. I might look if things get absolutely wild. I might jump on again tomorrow night because I've just got a feeling if we can end the US trading session in a kind of a decent place where there's no fear, there's no chaos, there's a lot of relief. People know that there's some stimulus coming. I think we're a genuine chance to have an amazing weekend. So guys, I'm going to wrap it up there. I hope you're all enjoying it. I'll talk to you again soon. Cheers.